Fibonacci levels are one of the most popular tools in trading, but the truth is they play second fiddle to higher time frame AMDs, accumulation, manipulation, distribution. That is how to read price action and get into high probability trades like this 2.7 hour short that played out perfectly on AUDJPY. I'm going to walk you through exactly why fib levels give you no edge in the market and what you should be looking at instead. So I'm just going to take this away and show you the initial read on the market. So we have structure breaking above. So we have retracement and a close above structure. So traditional thinking would say, where's our swing point? Where's our fib levels? This is where we need to enter. So we have this sell to buy, and we can mark that with a Fibonacci level to say, this is the retracement. We have our 0.5 level into our discount and our 0.618 level where we can start to think about entries. So let's just assume that you were looking for a continuation here. You marked this level, you protected the swing point, and you were looking for, say, a 2R, a continuation above this high. What happens? Price just sinks straight to your stop loss. You are out of the trade before you even got a chance to see what was happening. Why is this? Because this fib level is completely out of context with what's actually happening to price. So let me show you what is actually happening. I'm going to take this away and I'm going to overlay first and foremost the weekly time frame. So I'm looking at the 12-hour time frame. We're using this as our execution time frame, but we want to be trading swing ideas. So that's higher time frame, weekly candles, 2-week candles, and monthly candles. So by overlaying the weekly candle, we get a true read on price, and we can straight away see what phase of price the weekly candle is in. So we see here that we have accumulation. Price accumulates over a weekly time period. Price then drops in to the external range liquidity at the low of this candle. But crucially, it closes inside. So this is a weekly accumulation, manipulation, and distribution to the high. So when we're looking for continuations, okay, it could be possible that price wants to go higher. But let me bring in the monthly candle. We are also running a previous monthly high. So this entire period of price action is monthly accumulation. When price is extending here, it is breaking above a previous monthly candle range. So we have weekly AMD into a monthly high. So when you're looking for longs here, you can mark your Fibonacci levels, but it has no bearing on what is going to happen next in price. Because actually the true story here is this is manipulation and a structure shift to go short. So I'm just going to take away the monthly candle and show you exactly what happens. Price then accumulates, manipulates. Why does it manipulate? Because this candle closes inside of the previous candle's range. We also have the confirmed manipulation then of the monthly candle. So what happens next? Price distributes firstly to the weekly target. This is the low of the weekly accumulation candle, AMD. Then we start to see retracement. So if now you flipped your bias and you were looking to go short, and again you were looking at fib levels, let's see what actually happened. So say you wanted to take this point here, you were going to take the high above the order block. Again, you get an initial retracement into your zone. So let's imagine now you are going short from the 0.618 level here. You're protecting the stop. You get a tag in, price nearly runs down, but ultimately you're looking for continuation. So you're never actually getting close to where you need to take profit. Then price just retraces again and smashes you out of your position. Why is this happening again? Because we're getting the formation again of a new weekly AMD. Price is targeting the previous weekly high before it then completes to go lower and target where? The monthly continuation. So that is the true story of what's happening here with price. We are looking at higher time frame candle manipulations and always using AMD, accumulation, manipulation, distribution. This has nothing to do with fib levels. Let me just show you exactly how this eventually plays out. So we get a raid of the previous weekly structure. This becomes our weekly manipulation. So price manipulates above the high and closes inside. So now we're looking for shorts. What happens? This order block, the last buy to sell, gets manipulated before we dump. So we can just move to the daily chart here to see what's going on. Well, the exact same price action here, if I just overlay the weekly candle, we have our weekly accumulation, manipulation. What do we get? We get the formation of a daily order block. So this is the last buy to sell. It confirms as soon as this daily candle closes below the low. So we can just simply add a short to the entry of the daily order block. We don't need to cover the high because we have the manipulation already occurring. So we can just cover the manipulation. Where do we target? Take away the weekly candle, use the monthly continuations. This is over a 2.5 hour trade that just melts to the low. Why? Because we truly understand the relationship between our execution timeframes and higher timeframe intention of price. We don't need fib levels. We don't need indicators. We don't need anything. We just need to understand liquidity and what price is doing and what phase of price we're in. That is how to truly trade and swing trade markets. It's got nothing to do with fib levels. If you like this content, I teach AMD in a 3-part series. It's over 30 videos for free on my channel. Check it out and I'll see you on the next one.